How's it going, everybody? Welcome back. I wanted to do a midweek update on the portfolio and just kind of look at where we are based off the whole tariff day situation and where the market is currently setting, and kind of go over some of the buys and where my head's at going throughout the week and over the next couple months. As you can see, we're down just slightly 0.2% today. You can see the biggest top gainers and the biggest losers. I'm not going to go over this too much. If you're interested, I did a whole portfolio review on Monday or Sunday. You can go check that out. Today, we're going to focus on kind of what's going on with the overall market, including Bitcoin and MicroStrategy, and what the dividends are going to look like at these lower levels and my strategies. So, over the past month, the portfolio is down 2.9, almost 3% over the week, 1.1%, and today 0.3%. I just recently did some buys on MicroStrategy and Bitcoin to kind of take I'm not even sure how I want to say it, just to add exposure on these pullbacks, because long term I believe in it, and I think even if the US market, where I want to be positioned overall, is having a hard time over the next couple months or even years, which I really don't expect. I think even if we pull back, this is just the market pricing in, and I think SPY by the end of the year will still be in the high 6,000s. The S&P. But MicroStrategy is kind of looking good. I did some buys earlier this week, I said, and it's actually up 5% on the day. And this is the daily chart, and you can see it's not looking bad. We did have some pullbacks, but I mean, there's a big chunk of uh, volume and support right in this area, this 240 area. And it came down here in the beginning of March, held, and it just made a higher low. So, and Bitcoin just pretty much, where are we here? How do I have two MSTRs? Let me fix this. Bitcoin pretty much did the same thing. Let me pull up the Bitcoin chart. Bitcoin pretty much did the same thing. If you go back, there's a gap here. It kind of closed the gap. And Bitcoin has had a tendency to do this in the past, actually, too, is kind of break down either below and liquidate stop losses with leverage, or get bid up right before the last resistance. So it didn't actually come down and test this 73 fully. It just did this gap on here, which I'm guessing is from IBIT. I don't even know why uh, this chart has it. If we go to, well, we can see. Let's go to the Coinbase chart. There you go. So fully it's there. There is no gap there, right? But I'm sure maybe on IBIT there is. So on IBIT there's a gap, right? So it went and closed it, and that's pretty common to see in traditional markets. But overall, this is actually the asset that I bought in the portfolio is IBIT, and I'm like willing to add anywhere in this range down here for a long-term position. And I think where we're at in the portfolio as of right now with IBIT, we're at 2.2%. My position's down a little bit, 4%. And Bitcoin, that's nothing. I think the CAGR on Bitcoin over the last 5 years is about 50 to 70%. So, and the pullbacks historically for Bitcoin have been, 50%. So this is volatile. If you want to participate in the upside, you need to be willing to participate in the downside, or just be a really great trader at buying bottoms. But I'll go back to the Bitcoin chart again here. I don't know why. So I don't pay for that. So let's just pull up the IBIT chart on here. For Bitcoin, for this year alone, we've already seen a pretty big pullback. Year to date, we're down 11%. It doesn't really show it here, but I guess it's only down at the peak 60%. Yeah, so it's down 30% from all-time highs. Probably a little over that, which is pretty big. That's a big pullback, but not as big as we traditionally see. Like traditionally, we would pull back down to these high 30s. But now there's more interest in Bitcoin with ETFs and with ETFs and MicroStrategy and all this other stuff going on. So, um, yeah, I also want to go into my MSTY position that I just added. I'm actually pretty close to even, only down 1%. No dividends yet, of course, because it's a new position. It looks like the yield went down recently, which is fine. With all this volatility, I would assume that you'd see it hold or go up more. We'll have to wait and see, but I have $3,000 position. The dividends for this, $2,500 a year. So like I said in a previous video, is that what I plan to do with this is I'm using the dividends from this to buy actual iShares IBIT shares. So this is going to be generating yield and buying more shares of Bitcoin. So basically, even if this, I mean, hopefully this will be profitable to hold from this $20 level because it kind of goes up and down and stuff like that. And if it goes below, I can add more, but then I can use these shares instead of buying more MSTY, which could get, we don't really have enough history, let's be honest, with these covered call funds to know how much these are going to dilute or erode over time. So instead of buying more of those shares, I'm going to buy shares of IBIT. So I'm betting on Bitcoin going up and transferring that value to growth, kind of just as an experiment. We're still holding YieldMax. So this is 50%. You can see, even though we've lost 9,500 in capital gains, we've gained 16,000 in dividends. So we're a net 16% profit in that. And this has a lot of those funds in it too, a lot of the YieldMax. And XCTE is kind of performing better. I would say better so far, because right now we're in a pretty big pullback with the S&P, and this is still performing decently well. QDTE is not performing as well because the NQ has had a bigger pullback than that, but and even Coney is kind of held its own over time. You can see this has had a crazy capital loss for me. I'm down 10,000, but still up 4,000 from dividends. So it begs me to think when the times are good with these, when the token's on a major bull run, these YieldMax funds are great. But when you're in a bear market and the share price is going down, obviously these suffer worse than the underlying asset. So when buying these, the thought for me and a lot of other people has probably been, hey, I hold this and I get some passive dividends and income, and it's selling the covered calls for me, but it doesn't do it in the smartest way, and it really has to have tight, riskier spreads than you would do if you were selling these puts and calls on your own. So you're getting assigned way more than you would if you're taking an 80% chance to hit a strike price, in my opinion. And you're also not timing the market. They're just like blowing it in basically week after week, trying to produce these yields. I mean, maybe they're looking when there's a higher premium, but yeah, it's not always the smartest strategy. Or I'm trying to think of how I word this. Am I skeptical on YieldMax? No, I understand exactly what it's doing. I just think that at a certain point, growth is better, or just holding SCHD. And also it depends on your age. So like, how long are you holding these assets? There's just so many variables that you need to think about when you're trading. That's why if you see my core position, why I'm so heavy up here, these are generating yield. YieldMax, I actually, out of all of them, I like, even though Coney has produced better on paper, 20%, right? It's more volatile. So YieldMax is actually easier for me to hold, even though right now it looks like it's just going straight down because that's what the market has done. Up here it was doing decent, but everything I'm questioning to an extent now, as of, where do I want to be with these things? How much do I need? because the whole premise of me holding these is to get when if I need that security of having some income so I can be kind of like barista fire, you know. I still work, but I like having this extra income there. It at a certain point from a tax perspective too, it's like how much would I rather just have an SCHD or these where they're qualified dividends, because you don't get tax up to $80,000 on the qualified dividends in these. So I know I'm ranting, but this is how I'm thinking about all of this. And basically, this is kind of how I do my weekly portfolio shakeup. I'm looking with ETFs, you don't have to look at the underlying companies as much, but with these YieldMax, you definitely do. So, like MSTY, the reason I added this position is I realized, hey, this is on a big pullback, or big Bitcoin's on a big pullback. So is MSTY. I want to maybe create a position right now on this. With these other ones, it's kind of the same. And a lot of my strategy with these is just kind of buy in size when there's a pullback or whenever you have money that you want to add, and then drip, you know what I mean? When those investments come in, you can see right here, we'll look at Schwab because we just got paid dividend. 327. That's a buy. So the dividend didn't even come in yet because of Robinhood. So paid 331. It doesn't even show up on the reinvestment. So it probably got reinvested today because today's the second. So I'm guessing Robinhood paid yesterday, and the reinvestment hits today. So this just automatically happens. It automatically buys more shares and kind of keeps you DCA'd in over time. But yeah, I guess that's enough of my rant today. Like and subscribe if you guys want me to keep doing videos like this, just kind of free form and sharing what I'm thinking. Let me know in the comments below, and we'll see you in the next video.